Good morning, everybody. Welcome back to the Daily Profit Plan. It is Tuesday the 9th. One day away from FMC, where all the drama is going to happen. Did we survive the day yesterday? We should have. So we were patient, waited for price. We got filled, daily profit play. We got paid. So closed out my dollar credit for 30 cents. Nice little 70-cent win. Not bad on the dollar. And that was way before expiration. I think it was right in here where we were filled and wasn't that much later we got paid. So this would have been, let me check the stats here. By 12:57, we got filled at 11 o'clock and 12:57. So just less than, just barely less than 2 hours later. Nice little 70-cent win. We will take it. Let's do a little top down. Take a screenshot here. We finished inside the 50% ATRs. Top bottom, not threatened. VIX is up a little bit higher. We're at 1708 today. We'll keep an eye on the VIX again. Maybe just a little bit of elevated VIX because of the Fed coming tomorrow. We shall see. Okay. Let's see here. Chat's open for everybody. Philip, good morning. Dr. Barnes, what's happening? Good morning. Blake says we survived. I mean, we don't expect to lose, dude. You know that, Blake. That was good. Larry 6905, 6835, 10 wide. Did not take it there. I had to sweat it out. Oh, okay. But made a buck 75. That's what I want to hear. Good. Tom, good morning. Greg, good morning. Gil, what's happening? Terry, good morning. Donna says good day. Yeah. Good day, good day. All right, here is a little gamma for the day. 6846 was the close. I'll make that adjustment. Let me take the screenshot from yesterday. And we finished inside the 50% ATR. So we closed here. What was our plus minus on the day? We had like a plus minus 27.6. VIX went up a little bit, but plus minus on the day from the open to the close, wouldn't you know it, 28.12. I mean, I'm not going to say they're perfect, but within 1 point, that's pretty good. So, and it certainly was a little bit more directional for a Monday. I mean, for us to get filled, how we got filled, I'm not sure what that delta would have become. A 10 delta becomes a, what, 25, 30 delta for us to get filled. But at the end of the day, was full profit. And we were down with our line in the sand was the 68.20 and 69.05. So 69.05, which would be just up here, and 68.20 right there. And I did have a defense trade in the 69, I think it was a 67.90 by 85. That didn't get filled. It would have been nice to grab a little extra profit there, but we would have had to have most likely threatened the put side, come down a little bit deeper. But that's why it's, defense trades if needed, right? Where I don't mind them being in. I'm monitoring the VIX, making sure that it's an accurate reading. One thing I don't want to do when we talk about this in the Daily Profit Masterclass is we don't want to undershoot the VIX, right? Like if I saw the VIX right now at 1709 and then by noon today it's up to 19, I need to be making adjustments to my defense, right? Because the VIX at 17, let's go 1709, 17.09 divided by 16. So we're expecting like a 1.07% kind of extreme move to the high or low. If we were all the way up to 19 in the same day, 19 divided by 16, you go from like a 1.07 expected move to like a 1.19. That's a decent difference. I mean, you're going to go at least one strike different. Okay. So that's the deal with our defense trades is, we do have to monitor the VIX. Okay. All right. 1 second. All right. Let's see. Bond's getting a pop. 2863. Oh, okay, that's a plus minus on the day. Got it. Yep. So look at that. SPX. I'm gonna log out, log back in. I was finishing up 6 years of testing. If you'd like to take a look at that, I've mentioned the income grid. Kind of an update there. So turns out I'm going to build a bigger and better dashboard tool, but I'm actually just going to run the income grid with alerts. It should be something I can do Sunday evening, Monday mornings before we even start trading. Place the orders, grid trade. So we'll talk about that in a moment. Let's go back into Tasty. Got my screenshot here. Okay, so close 68.46 in between the 50 percenters. Yes, yes, yes. Bit directional for a Monday, but plus minus 27.60. Pre-market reading. And the day closed plus minus 28. All right, nice winner there. Logging back in. Let's do a little macro going this morning. Market breadth, now 49.5% of stocks above the 50-day, 56% of stocks above the 200-day. Keep an eye on this one for the week, especially with the Fed having a pretty reasonable catalyst for tomorrow. Part of me treats this, FOMC news as whatever happens price action wise. Um, if we have a noisy FOMC, okay, I'll just here's what I think. FOMC is generally a big fat indecision trade. Okay, so if you look at a given day, you have a candle open, candle low, right? Candle high, candle close. That's candlestick, right? So you have your open, high, low, low, and close. Right? Now, for an FOMC day, typically an FOMC day, if you look at the 2 p.m. to 4 p.m. especially, or look at the end of the day candle, a lot of times FOMC days look like this. There's a big high, there's a big low, but there's a big freaking indecision candle. And it's the post FOMC that I pay the most attention to. So if we do have an indecision candle after FOMC tomorrow, okay, then I'm looking to see what happens here, what happens here. That's the follow through. All right. So if it's indecision and we follow through the upside, I don't think the news for the US matters at all. I think this market's going to stay in that little melt up mode through the end of the year, and we possibly hit 7,000 plus. That wouldn't surprise me. If we follow through to the downside, I think that the kind of 6,700 zone for that NVIDIA level, if we have a nasty, nasty, nasty move, which would be a terrible way to finish the year, maybe measured moves all the way down to like 6,100, maybe 6,000. And I know that's a big difference of like, well, a slow melt up to 7,000 versus a dump of, 700 points. I know that's a big difference. But you also know that the bears move way faster and things get a lot crazier. When the VIX is up and prices are falling, they tend to fall fast. I.e., the candle from November 20th was a 3+% candle. The candle from October 10th was a 3+% candle. So it doesn't take much to move that far. So what is 600 points? Let's go 700 points because we're at like 6,800. Let's go 700 points out of a 68 uh 50 instrument or 40 instrument. Yikes. That'd be a 10% move. Oof. Yeah, that would sting. And we would essentially wash I mean, we wash a big chunk of this year's gains. So I'm not saying that's happening. I'm saying like the follow through. I go back to how important the structure is. Okay. Right now we have everything stacked up to the upside. We're above the 21, above the 50, above the 144, above the 200 DMA. All the stuff is still good, right? Path of least resistance. We had a negative December last year. We probably won't follow it up with a negative December this year, or we shouldn't, even though seasonality is really weird this year because there essentially wasn't any. We didn't have a pullback in July, August, September. We didn't have a pullback at all post March and April. So, I think at best, we drift a little bit higher. What I would expect would be just kind of a big flat, maybe finish to the holidays where nothing really happens. Um, and then worst case would be we come down here. That is, to me, that's the line in the sand. If the Bulls are going to defend it, that's the defense level. If it doesn't work, we push down to this 200. We still bounce from there. Okay, can we push down further? Yeah, I suppose that this is going to be a turning point. If we turn hard here, could this still be the measurements of a head and shoulders? Sure. So you have your potential symmetry. That's one spot for a bounce. But a head and shoulders, a true head and shoulders, is measured from the neckline, high to low, lower high to lower low. That's going to push us down to the low 6,000s. Even though this is a long ways away, it's just it gets a little lopsided when that's what the beautiful thing about head and shoulders are. And the same works for the upside. If you have a reversal pattern, head and shoulders, reversal pattern, if you start participating here, the measured move is take this move, the impulse move, and measure it above. And that's your profit target. And once we establish a bottom, profit target one, and then let that thing go higher because, usually a really nasty dip is followed by, reflexive rallies. Okay. So on the FOMC tomorrow, that's what I'm looking for. So when the dust settles, the goal is what's happening after FOMC. Price action after, I think that kind of sets us up for how this year is going to end. I know that we're going to have non-farm payroll release at some point. We'll have inflation data, I think. I also keep seeing things pop up on Twitter and other places that they're just going to cancel the release. So all this stuff was disrupted from the shutdown. I mean, Powell might say stuff like that too, right? Powell might acknowledge that the shutdown, has weighed on GDP and has weighed on the Fed's decisions, maybe, but we will see. So FOMC is at 2 p.m. tomorrow Eastern time, and then the press conference with Powell is 2:30. Okay. On that note, tomorrow's trading, we'll talk about it more in the morning, but tomorrow's trading FOMC days are typically, pretty calm in the mornings, but all of the implied volatility just kind of sticks to our daily profit play trade until like literally 2 p.m. or after. And so it's a difficult trade to say like, I like this trade. I should hang in there for, let's take a trade at 9:30 in the morning and let's hang out until 2 o'clock in the afternoon waiting to see if I can get this trade right. Although market makers should do their job, it's still an annoying trade because if price did this, where we have opening bell and price does this literally all morning, that trade in a typical daily profit play would be done in 60 to 90 minutes for a winner. Okay. But in an FOMC day, that trade, that price does nothing all day, literally all day. And all of a sudden it's 2 p.m. and you're like, I'm still break even. And prices move 5 points today. That's, it's just like the dynamics and how sensitive volatility is and applied volatility is around the 2 p.m. news, because that's going to matter the most from 2 p.m. to 4 p.m. That's where all of the excitement happens. And the markets don't know, right? Like the markets are just kind of hanging out, waiting to see what their big reaction is going to be. And at the end of the day, it's probably going to be something quiet. It might settle and still be within the market maker move. But it's that, it's the unknown that is unfortunately like a nasty price action day where we just don't get the typical win on a daily profit play unless you're willing to ride out through some of the crazy volatility and uncertainty. Okay. So I am 100% okay with tomorrow not forcing a trade in the morning. We can talk levels, we could talk hypotheticals, but I'm probably not going to force a trade because I don't want to sit on it all day and then still be potentially at risk, 2 p.m. to 4 p.m. If there's a directional push somewhere, our trade is going to be probably crap. Okay. And the plus minus for tomorrow is, let's go SPX here. Plus minus for tomorrow is, I mean, it's not nothing. We have plus 28.63 today. Okay. So Tuesday, 28.63. And then Wednesday's a new day, but right now we're showing 54.5 from today's price to tomorrow, about a 55-point move, one way or the other. And that doesn't have to be, price can go 80, 90 points higher, but settle within 55 points for tomorrow. I still have that broken wing butterfly trade that we posted yesterday. That's above and below. I think those are pretty decent levels for next Monday. Anything's possible, but if we get filled, I'm asking for a pretty decent fill here. I'm still looking at a pending 250, 250. If these offer, and I'll be honest here, if we're going to offer $1.25 or $1.50, I'm probably going to take the trade. Okay. So I put 250 in because if there's a ton of volatility, then get me filled for 250, risk no more than 250. And I still think the trade mechanically is good. I didn't love that I had to go down in my strikes on the call side because of the way I wanted to only risk 250 on the trade versus, I guess it'd be versus 450. So anyway, pending orders. But if I see them offering like $1.50 or $1.25, $1.75, I may adjust this and just take the trade on one side or the other. Okay. Nice, Stephanie. There you go. Philip says you recommend skipping the rate announcement day. Yeah, I mean, like I said, look, I'll be here in the morning. We'll talk about it. I'll talk my levels. I'll see if if it's going to get filled. It's like, okay, so this actually is filling for $1. But we've experienced this many times this year with FOMC. You typically have to ride it out much longer than like a 60 to 90 minute window. Usually you have to sit on this trade and you have to be like the last time this happened, I think I traded in September, and that was a highly anticipated rate decision, right? That was our first cut of the year. And the market, I mean, you can go back to the price action here in September. It would have been FOMC. This is it. Pretty sure this is FOMC candle day. That was that. Yeah. So if FOMC was right here, it was just a giant indecision candle. But we sat on our trade all morning and price was within like 5 points, like literally within 5 points of like the open. And we're sitting here until like 2 in the afternoon. Price hasn't moved at all. We should be perfectly profitable on the trade. And we had to sit and ride it out. And price went down initially, came all the way back up through from 2 to 4 p.m. Ended up being a big indecision news event. But we rode that thing out for I don't know, like a 35 or 40 cent winner out of the dollar that I got filled on. But it just took all day. So that's the only risk is you take the trade in the morning and then you're just gonna cross your fingers that price doesn't move at all, and the price doesn't move at all during FOMC, and that's just a little bit out of sorts. It shouldn't, like, our daily profit play shouldn't be like that, right? So knowing that, it's like, yeah, it's just a trading with a bit more risk. That's all it is. So you got to risk it to get the biscuit. So if you want to take the risk, you can throw the trade in the morning. Mechanically speaking, the trade still works the same way. The plus minus is priced in. It's all priced in. Question is, the market makers can keep it there. Okay. Pending orders, daily profit. Nope, they're none. There's no service attached to those butterflies. I just did those yesterday in the chat. Yep. So I did those yesterday. The trades were as follows. I think I built it out in option strat. See if this is the right one. Yep. So I built this out yesterday in class. This is for everybody if you want it. None of them is filled. So nothing is filled. But on the call side, so here's current price around 68.50. Okay. 69.22 is our all-time high. The Nvidia sell-off candles around like 6,700, I believe. So on my call side, I'm starting at the 7,000 handle to do a broken wing butterfly. and I'm looking at this one as a potential $1,000 profit trap. And my line in the sand, so my break even here is 70, 70, 70, 20. So if I get filled at $2.50, which would be a heck of a fill, it'd be 7022.50. That'd be my break even. Okay. And this is for next Monday, so the 15th. On this 6,700 trade, I want price to start at 66. What am I doing? I'm buying the 66.65. This one has a $500 profit trap. My break even would be 6657.50 if I get filled at 250. Okay. Like I said, even if I took $1 out of this trade or $1 out of this trade, I'm still okay with that, but I'm risking four to make one. But this one has a $1,000 profit trap. This one has a $500 profit trap to help me offset, the break even, and also, potentially have a nice little profit trap if it comes to that by like Friday or Monday. Monday is when the profit trap pays me. Monday the 15th is when the profit trap pays me. So that's why I'm like, you know what? Let's try to get a bigger credit. Let's try to get $2. Let's try to get $2.50. Let's make this, really, really low risk, in my opinion. But probability profit, really high. I don't think that price will necessarily hit either direction. It's just, do we get a poke up or down fast enough to get us filled? Maria says TOS rejected the trades. Well, they reject them like they didn't accept them? Did you put them in good till canceled? Mine are good till canceled, so they're still pending. Okay. So yeah, these are not any service related. I just posted this as a bonus. I shared this with Lance in the group yesterday in Stonkomania. So yeah, interesting trade. Like letting price come to me. Tightening the risk, having a profit trap. If I get filled, I think it's a high probability top and bottom, and trying to give myself 10 extra points on the upside and 5 or 10 extra points on the downside. Okay, cool. All right, market's open here in about 3 minutes. Let me get some highs and lows. VIX is at 1715. Let's keep an eye on this morning. So right now, a 1715 VIX, which is, not where things are necessarily guaranteed to stop, but 1715, 17.15 divided by 16. We got a 1.07. 1.07. So let's make an adjustment here. Futures down slightly. So 68.46. Okay, and then 1.072. Yesterday's close. Since we're going to gap open, I'm going to start to the upside. Let's go 1.07. So 69.21. And that's the VIX at 17.15. Okay, and then with a slight gap open, we'll go gap lower, so 0.12% or so. So we start a gap lower about 68.38. And then go 1.07. We're going to go around 67.64, 67.63. 67.64. I'll just go 63 for good measure. That's the 17.15 VIX. All right. Plus minus in the day, I'm reading 28.63 pre-market. Hopefully it's a big nothing burger day because this is all pre-FOMC. I'd like to take a trade similar to yesterday, which is looking at a slightly lower delta, let price come to us. We get filled. Excellent. Have a couple of defense trades. I don't think we're going to need, not need. I always want a defense trade if I need it, but I don't think that we're necessarily going to get defense trades filled if we have like a calm, pre-FOMC chill day. Okay. Top down, futures down a little bit. NASDAQ futures down slightly, about 0.19. Dow futures down 0.02. Russell futures down 0.0, well, 0.25 or so. VIX is up to 17.5. Dollar still below the 100 handle. Oil, I've got a trade expiring next week for oil futures. All right. Gold, silver's up again. Jeez, man, crazy. 1.24% on silver. Hi ho, silver. Bitcoin at 90. A big win for Bitcoin would be like somehow getting back to 100K and staying there versus like getting a huge rejection. We will see. I'm wondering if that was enough damage done on Bitcoin to kind of stabilize or if we need like another nasty flush. All right. Let's go live market. Gap lower, but immediately ripped up. Let me find some real-time gamma. So positive gamma. This is a massive transition zone today. If we're greater than 68.45, that is positive gamma. Okay, this is a long ways away. So do want to like keep this in perspective. Like that's a big transition zone for price to move, up to like 40, 50 points today. But we'll see. All right. So let's go today, the 9th, plus or minus 25.6. Have a look at everything this morning. Delta wise, these freaking call deltas are so close to the expected move. I hate it. All right, there we go. A little bit further away now, 68.85, 68.90. I will shoot for a 10 delta this morning. 10 delta this morning. It's trading at 75.80 cents. I will do something similar to yesterday. If it fills for a buck, I'm taking it for a buck. Give it a little bit more wiggle room. Let price kind of come to us. So trade's pretty easy to pick out. I will go throw that in. Very good. And put it in Telegram. All right. So today is the 9th. Levels. $67.90, 85. Okay. Pending order. Report at 10. I think it's Joel's job openings. So we had ADP weekly employment. No forecast came in positive. Was there any revision here? Previous negative 13.5. I mean, okay. Japan talking positive. Joel's job openings at, and again, I don't think this freaking matters. I don't think it matters. We have Joel's job openings at 10. And is it September only? Is this just September data? Is there anything that's more recent? That I don't know. So we'll see. I mean, honestly, FOMC is the most important thing this week by far. So yeah, I mean, it does potentially cause a little bit of movement at 10, but I wouldn't be super excited for it. Okay, here's some real-time gamma. Positive, negative gamma around the 68.45 handle. Are we going to see? I mean, I don't see a lot of positive gamma throwing his hat in the ring up to, I mean, maybe the 50% ATR, but most of it seems pretty sticky around this positive negative gamma pivot point, which is 68.45. I mean, obviously price can fill up and work its way to the 50% ATR. That's 68.70. We have an 85 call side. So 85 is up here. We'd have to have nearly 100% ATR today. So let's see what happens. Okay, what's the VIX doing? VIX is up as high as 1721 this morning. That's a tiny little adjustment. 17.21. So 1.075. It's still going to be the same number. Our strikes are still going to be the same for higher low. Now, if the VIX goes over 18, 18.25, 18.5, then this might be one strike different. So if I'm going to, position for this, I'd still have like the 69.20 or the 69.25 as my pin price on my broken wing butterfly. So 17.2 VIX. Yeah, that's not going to, I mean, so far this won't change. If price goes back down here, then we'll have a 17.2 VIX. That's kind of our top for the day. 107.5. Smooth Jazz, 107.5. Let's do the math to be sure. From the gap lower, 107, 67, 66. From the closing bell yesterday, 21. Yep. So same prices. All right. So 69, 20, 25, and 35. It's going to be some defense here if needed. Put this in for a pending credit. And I'll put these in Telegram for DPP in 30 seconds. And then 63, 67, 63, 67. Go one strike lower on the volatility side of the downside because the VIX would be jumping. So see if that takes. Okay. Here's how my trade doesn't get rejected. I put in the trade, make sure the order type is a pending credit, and then toss it in. So $1 credit, toss it in, pending order. They're trading for 4 and 5 cents right now. I mean, I could see how if it was trading for like a 1 or 5 cent debit that they'd reject the order because it's not, showing current credit, but it's still actually built for a small credit. Okay. Yeah, that's strange how it's rejecting it, but that's the trade that I want. All right. So defense trades. Make sure those are both 1-2-1s. Yep. It messed up my. See how this shows like a buy, sell, sell? That's not accurate. Okay. I know that I put the trade in correctly. That would have been the put side. So 67, 60, 55, 45. 60, 55, 45. Based on that 63 bottom. Or I can do this. 65, 60, 50. No, I'll do this. I'll do that strike. I'm going to go there. So 60, 55, 45. So I'm building this trade correctly in my platform. It just was wrong in the activity spot for whatever reason. I don't like it when they do that, obviously. But I know that I need to put it in for $1. Net credit. Send the trade. So now what I'll do is I'll take a screenshot of this. I'll post this in Telegram for members. All right. Based on 17.20 VIX. Okay. Trade is in. Now let's see. Delta's increasing a little bit on the call side. Not a ton, though. We opened up around 40. We're up 10 points right now, plus minus 20, 28.6 on the day. I don't love that my call side, we opened at 40, so I'm 45 to 50 points higher on the call side. We'll see. But based on my ATR levels this morning, if our trade is going to be threatened, we'd have to be up here 85, pushing towards that 100% ATR. So is it doable? I mean, sure, but hopefully it doesn't hit there or stay there. The most important thing is we don't stay there. Okay. All right. So we'll let that marinate for a moment. Let's go a little bit more top down. I want to talk some income grid. Um, got a pretty good sampling here, 6 years of trading. So, I could go back further, but I've been doing it all manually. I've kind of refined and optimized the strategy to my liking and had some pretty interesting discoveries. So, this is something I'll be talking a little bit more about in the coming weeks. Let's go top down here. So, SPX, probably a pretty chill, nothing burger day. Are we going to, go higher, go lower, post FOMC? That's probably the next, driver of price. Tomorrow I will be live for FOMC 1 p.m. Okay, let's go dollar index. If the dollar continues to weaken, that's probably a good sign to finish out the year with positive drift in the equities market. If the dollar comes right back up to the 100 handle, that's not a good thing. I don't know what's going to happen. This has been an odd pattern all year, honestly. Falling wedge bottomed out here during that September rate decision, and now it's stuck between dynamic resistance, which is this moving average cluster. Do we break and revisit the backside of this wedge? Do we come back and revisit the lows again? I think if traders are lucky, we just see like a range trade on the dollar, and there's not a lot of big swings either direction. But if it just stays choppy here, again, like indecision, that means risk off to me. That means risk on to me. So I'll be keeping an eye on the dollar index. Oil, gold, silver. Oil is falling slightly, but I do have a nice little futures trade running. I'm up $219 out of the max 220. Could I close this morning for a winner? Maybe, maybe not. 0.01 will let me close. That one hasn't filled either. I'm going to take this trade off. See if I can close this for a 1 center. So 0.01. Debit. Jeez. Taking away 10 of my 220, huh? Well, I could let it cash settle. This thing expires on Tuesday. I don't think oil is going to be at $50 by Tuesday. So I'll write it out. It's like a 99%er, 99.5% chance of profit. Let's let it settle. But that's a nice win on oil futures. We should have that for Project Options Edge. Let me check here. Project Options Edge. Do a little search. Boom. There it is. So this trade was placed in June. $220 credit, $500 profit trap, 1780 max risk, and 85% chance of profit. We're now sitting at a 99% chance of profit. So I'll take this and copy. So copy this. Oh, not that. All right. Trade management. So today is the 9th. Let it expire for full credit on 12/16. Another winner. I'm going to tally up. I think we got a pretty good tally running here for Project Options Edge. Let me see. CL. Hey, I take some trades off last week. I know I closed a Costco trade for a winner. Coinbase I closed for a winner. Those were last week. Costco winner, Coinbase winner. Coinbase winner. That was a December 19th. Lovely. Um, Let me tally up some winners here. It's a lot. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 6, 7, 8, 9, 30. 1, 2, 3. I'm showing over 40 winners with one loss. And that one loss was a half a loss on Spotify. Nope, two losses. I got an ES futures trade as well. So two losses over 41 winners. Not a bad little bonus. 41 winners out of 43 trades, 95 percenters. Not bad. So more, the good thing is, we got a few more trades to manage. We talked about these. I talked about this in an afternoon session, I think on Friday last week. We have trades running on Home Depot, Hims. Chipotle is going to be a repair trade. Coinbase, Costco, winners, Micron, Adobe, T-Mobile, Dutch Brothers, Pepsi, and Zoom, all looking to be like an extra $2,600 in profit. No complaints to roll that into the end of the year. Okay, gold and silver, natty gas, up to 17, back down to 14. This does drive me a little bit crazy, but this is why I'm just sitting in like a deep in the money call. I've got a $5 call on UNG, and if we hit 20 or higher, I will start grabbing some profit out of this thing. I'm going to go 20 and 23 for some alerts. Gold. I mentioned this before. I know like gold and silver are very attractive. They're becoming, a huge discussion for the future, which great. The coin phrase we might have in the next five or 10 years is gold is now unobtainium or unaffordium, and silver is unobtainium. So this, silver has been changed to just an industrial metal to now a strategic metal, and the price is going crazy. So this is quite the squeeze. I still think it's expect volatility ahead. If it squeezes. One thing I will say is if silver goes straight up like this, it is not going to stall and then wait for more accumulation. Like it will go straight up and it will go straight down. So just be prepared for some crazy swings. If we get a squeeze, to $70+ that could be exciting for those that are hanging into silver. But for those that are waiting for more opportunities, if we get any pullbacks or even if we have a really ridiculous correction, previous all-time highs are right here. So I would just be patient. I have, a lot of dollar cost average levels in silver. I think this is something to also become like an allocation to the portfolio. but it's been a heck of a trade. I mean, year to date, silver's up, I think, over 50%. Oof, look at that candle. It's a monster. Are you kidding me, dude? Silver's up 105% for the year. That is wild, man. But I knew silver was a good trade a couple years ago, but I never expected it to deliver like all this in 1 year. But cool that it did. Um, Silver was a big alpha play this year. Anybody in silver who's got some SLV, who's got some silver bars, who's got some silver futures? It's it's tradable. I've got puts, I got ratio spreads, I've got own shares. I'm back in SLV, even though I took profit after a huge run for the last 2 3 years. I'm back in. I just think they both have a need to be in the portfolio. Just not throwing full position back in. I'm just going to build it back up to where I want it. Yes, yes, and that's very good. Cool. Bitcoin. We'll see what happens over the holidays. I don't love this. High low consolidation, high low consolidation, high low consolidation. Right, like these just making like these break patterns. But on the, I guess I could get picky. I'm just not trying to give myself like bias where I'm like, oh, I see this technically. It's like, I mean, honestly, Bitcoin doesn't look good to me until we get back above like 105 or 110. To me, this is when the bulls get like the control back and they break the trend line. But I do want to see how this area plays out. Like if it is fall contained, okay, fine. But like, do we trough out here with maybe a test of 80K? If we hold 80K and then work our way higher, then I think we could put in a bottom. But the I mean, it follows the Nasdaq, it follows liquidity. I think for Bitcoin to have like an aggressive year-end rally, we probably want to see the SPY, the QQQ go higher. You want to see that, that risk appetite coming back in the markets for Bitcoin to recover. Let's see. MicroStrategy. Put an interesting trade in here with a closing playbook I did with Nate. Where's that? Right here. So build a trade segment. This is up 75 bucks. So I've got a $500 profit trap and a naked put at 140. If this thing trades, I mean, I'm up. So max profit's $233. Maybe after FOMC, it'll be a little bit more interesting. Potentially I can make 730 bucks on this trade. But I don't want to own shares. So if price falls to like 140 or lower, I'm going to manage the stop loss side of that put. But ideally, I'd like to see this trade for like $115, $120, or a lot more. So anyway, we'll see how it plays out. But I'm hoping this trade is at least going to offer me like 120 bucks. What else? Japanese yen getting weaker. One trade for an interesting hedge. This one to me is just kind of worth like, and maybe it's garbage. Like honestly, maybe this is a terrible trade. But if I did a position here and just bought FXY, which is essentially like holding Japanese yen strong, I don't know how it happens, but it might be way too early to this trade. But we could have some currency drama in the next 12 to 24 months. Or by 2030, it's like, I have no idea, man. The Japanese yen is such a crazy currency. But if this works its way back up and becomes a pattern trade, there is a pretty good measured move here. I mean, the downside is that looks like a monster move. You're literally talking like a doubling here, but there's no leverage. So it's like if I bought shares, I'm up 26%. That's a decent hedge, but obviously for a hedge, it's like it'd be nice to have the asymmetry of I'm risking, maximum. Let's say I buy 100 shares of this, I'm risking like $5,900. Okay, well that means that the Japanese yen has to go to zero for me to risk that much money. If the Japanese yen shows any type of safe haven, um, which that's the tricky part is like I know the 10-year yields are rising. I know that's been a big story these last few weeks. The Nikkei is still sitting near all-time highs. And if they want to keep pumping this Nikkei higher, they probably have to keep seeing a weaker currency. So unless we have like a currency crisis, I don't know, maybe the Japanese yen is it'll have its day in the sun at some point. It's just you don't want to be in this trade. Like you don't want the Japanese yen to get stronger because that means that everything's going back to safe haven. You're going to see a huge correction in equities. So what I mean, again, I think it's a decent hedge, but it's not going to be a fun trade because if you get paid on the Japanese yen getting super super strong, you're going to see the equities market in a bloodbath. So that's the trade off. But anyway, we'll see. Nikkei after that, this is the last time it happened. So the Nikkei during that brief unwinding of the carry trade was back here, and we have since bottoms, returned, and doubled. Like really nice double bottom, really nice measure move. That's why I was long, getting long on those retests of the lows. So I've been holding EWJ for that gain. Yep. So yeah, I mean, and why would I trade it with FXY versus like a Japanese yen currency? Because there's negative swap. So you look at any currency pairs if anybody trades forex. Swiss yen is the only currency pair that you could trade and short and get. Honestly, I don't even know if the broker would pay you. They should, but it wouldn't surprise me if brokers are like, yeah, you're going to get charged negative carry for this every single day, even though the Swiss is 0% and the Japanese yen is 0.5. But if they raise rates again, this is anticipated, I swear, we have FOMC this week. Do we have Bank of Japan overnight? They tend to like piggyback off of FOMC. I am curious. So there's the cut expected for tomorrow. Press conference at 2:30. Japanese anything? Swiss National Bank expected to stay at 0. Nothing for JPY. Okay. So I'm not seeing anything on Japan. And usually it's always like an 11 p.m. to 2 a.m. window Eastern time. Pound. Nope. All low impact news. Nothing out of Japan. There it is. Okay, so the 18th. So we're supposed to have CPI that day, that night. BOJ, no forecast. December 18th. I'm gonna write that down. Just in case. Just in case we have some stupid stuff. All right. Good to know. They best not raise rates. Yeah, we'll see. I mean, I have no idea. Like honestly, they have been the wildest, craziest, most radical monetary policy. I mean, I've been trading currency since like '07 and going through 2012 with the Japanese yen, going through 2020 and 2022 with the Japanese yen. Like they have been some defining moments in a lot of traders, um, you know, journeys, I suppose. But unfortunately, I would say that's probably not for the better. I was fortunate to make a lot of money in 2012 with the carry trade. Um, I was long dollar yen, I was long euro yen. That ride to 100 for the first time in decades. So from like the 86, 87 handle up to 100, that was a nice little 1300 pip move that was just scaled into. Um, but then I thought I could trade the Japanese yen really, really well, and I realized that you can't. So my best advice for Japanese yen trading is trade what you see and do not scale in and try to call tops and bottoms. And when it runs, let that thing go to break even, get a break even stop loss in, and just sit back and watch. Because if you're on the right side of a fundamental and technically driven move, you can have thousands and thousands of pips of movement. And it's just eliminating it. Like if you trade the Japanese yen, much like you would a stock, you're in pretty good shape. If you trade the Japanese yen, like I trade a lot of other currencies, which is I scale in, I trade efficiencies, I trade pivots and pockets and Fibonacci's and things like that. You want retracements and dips, you don't get them. It's a currency pair that just doesn't behave rationally. It trades like a one-way train. So anyway, We'll see. That's just some big picture stuff. I think in the U.S. too, we have to keep an eye on this. U.S. 10-year yields, even though the Fed is cutting again tomorrow, 10-year yields have been extremely sticky. We are not back below the Liberation Day lows here when the market was essentially breaking. So this is my other concern is that if yields go higher, even if it's slow, and we're right back into the thick of these like 4% 10-year yields, it just means that we're still not seeing stuff get better. Cars are still expensive. House is still expensive, right? We'll see because the Fed is controlling the short end of the curve. Bond markets. I mean, how ugly does TLT get? Well, we're going down as yields go higher. So another thing to keep an eye on for the end of the year is, are we going to see bonds go lower? Right? If yields go higher, bonds go lower. How are we doing for the year on TLT? Are we green or are we like barely positive? Look at this freaking. All right. Well, has anyone heard the phrase T-bill and chill? We've had a pretty legitimate bear market since 2020. So obviously COVID, we had some safe haven behavior, but once the bond market topped out here, aggressive sell-off in 2020, 2021, terrible, 2022, awful, 2023, 2024, present. Look at this thing. An absolute nothing burger of a year. I don't know if this is the bottom. Okay. I think there's a lot of traders right now. There are a lot of traders right now that think that I could just sit in TLT, okay, collect 4% and collect 4% risk free. That's what people think. I don't think it's a bad trade. However, I don't think it's risk free. Okay. I don't think anything is risk free. Um, if we are lucky, this goes back to early 2000s. So we've got a 20 plus year, like, okay, yeah, is this a support level? Maybe. But if we have any, refinancing issues in the US, if we have liquidity issues in the US, if we have debt issues in the US, if it takes us, I mean, COVID was a what, $2 to $3 trillion bailout essentially, and it was a $6 or $7 trillion bailout globally. My concern is like a COVID type bailout is, I mean, I don't even know what the catalyst would be, but if something happens where we blow the deficits out and we're at 45 or $50 trillion, I mean, I don't know what that looks like for a bond market. I really don't. And so I don't think this is a guaranteed bottom. I think that if you have low volatility, I mean, what are bond traders doing this year? Well, they're happy that the market's not freaking down because it's been down and down and down and down. So who cares about your yields, right? How much of a slap in the face is it to get like a 1% yield and the bond market's down, 20%? Freaking yuck, right? So at least this year, you're holding on, getting like a 4 to 4.5. So is it stabilizing? Sure. But anyway, I don't know. I don't subscribe to the T-bill and chill. I think there's a lot more risk. I'd rather be willing to take that risk and throw it into like gold and silver. I think that's a little bit more store value. I like the physical side of commodities a little bit more. And I mean, trading options, collecting premiums, managing risk. So I'm not a typical fixed income trader outside of a box trade that is like 100% guaranteed profit. But that cost, it's a lot of capital, but you can generally get about 4.5% of that capital. So you get the same pay as you would. Even this dividend yield in TLT is 3.8%. It was over 4. So I can do a box trade on the SPX and get like 4.25 to 4.5% if I'm going out just over 12 months. I mean, to me, that's a better trade than holding TLT that could dip another, $5 or $10. Markets run on bailouts. Yeah. Yeah. And they do until they don't. It's like, and that's what, I mean, we have bigger problems if like all of a sudden a bailout is ineffective. And that's the weird part is like, does that ever happen? I do think that everyone's in the same boat. I think that US and China and Europe, your major liquidity providers, Japan, I mean, they're all in the same debt bubble. So if one is going down, like everyone's worried about the US, it's like if we're going down, we're taking everyone with us. So I think at the end of the day, it's like the only way you could offset, the fiat debt bubble would be like who has the most gold, who has the most silver, who has the most commodities. And I think that's where China makes a pretty good argument is they've been doing this stuff for pretty aggressively the last 15, 20 years. So doesn't mean the world's going to back them. It's just I think by it's like the necessary evil where it's like, well, they do have all these things. I do need to trade. So that's just because you have to. And yet we've made it divisive where we have to choose like, can't align with China, got to align with us. And just a really polarizing year. That's all. Anyway, that's a little top down. I still have not been filled on today's daily profit play. That is fine. Let's see where we're at. So it's offering about 75 to 80 cents this morning. It's now trading at 53. It's going to hang out. I mean, we got filled yesterday around what 11, like 11 a.m. So if we have a bit more direction this morning, no big deal. So where is I mean, this might be a good spot if it's cheap enough. Maybe a good spot for this afternoon to have like a stickiness around like 45 or 50. See if I can price something out for this morning. 45 or 50. So I get more premium here, more premium here. 65 by 30. So I can risk $200 to make 800. If I put my strikes in the same spot, that 45 is the sticky zone. 50 is a nice round number. I'll try to keep it around. I'm going to see if it sticks to 50 or 40, 45 today. So that's 15 wide, risking 275. Yeah. I mean, it's an okay trade. I just don't love that risk in case price decides to stay directional. So I don't love that trade. Yeah, I'll just hang tight. All right, what else going on? Let's do. So yesterday we had a good class of waterfall income. I wanted to see. So tomorrow's FOMC. How many traders want to jump into a masterclass with me this week for waterfall income? So if you want to be a new member and join me, have a great session with me this week. We can do a class on. Let's see here. We can do a class on Thursday or Friday. Let's do this. How about a 2 p.m. class? Let's do 2 p.m. class on Thursday for now. If we need to extend it, then we'll go Friday too. But I'll put in a Thursday class for waterfall income. Okay. So yeah, Gary beat me to the point. How many? Just type in a why me or yes in the chat if you'd like to join me for a waterfall income class this week. So Thursday. Oops. I'll do a Thursday. Thursday at, let's go 2 p.m. Eastern time. Thursday, 2 p.m. We can, if we need more time, we can carry that into a Friday session as well, but we should be able to cover everything in maybe a 60 to 90 minute session on Thursday. Okay, nice. So I want to see y'all show up. Gary and Kent, Lisa, Donna, Pryor, Sharon, Moyes, James, then show up. I want 50, 60, 70 people in class, right? Other people that said yes, give me some feedback and let everyone see it. Everyone that's in the chat today, give some feedback on waterfall income. We've had that service now for a year plus. Like it's been about a year and 3 months, year and 4 months. We've got about a 94% win rate, and we're sitting on another 8 or 9 positions that are all in profit right now. I like where they're at. We've got a couple we talked about yesterday, and I mean, I think if the market just stays where it is, finishes the year higher, we've got a nice big fat chunk of profit to roll in. We also have like $8,000 in profit traps just in case something silly happens, but we're playing off some pretty good technicals to finish out the year. So, you know, I think it is one of my favorite strategies to teach. It is one of my favorite courses to run. It is not super labor intensive for me. I just show up and trade the same thing every Monday, which is also why I'm building out like my income grid, which you'll see more of in the next couple of weeks. I'll spend a little more time on it tomorrow with you here to do a little showcasing. I do have my income grid, which I thought is pretty sweet. So this is income grid. We got a profit factor of 2.15, nearly 70% wins. And the concept is really, really simple. I traded this thing through 2020, 2021, 2022, 2023, 2024, 2025. It's not perfect, but basically, if I have a loss, I can break even or better. If I have a win, I stack up wins, and you just play really good technicals, path of least resistance, participate with a risk reward that's favorable, so a 1-to-1 or better. And I traded this both ways. So you could buy or sell. So if we have bear alignments or bull alignments, you trade accordingly. Okay. 65% win rate trade in the market both ways. If you just stay bullish, which means what we have in the income grid is you have a buy only. Okay. Buy only confirmation. And then you have indecision, which you don't force trades. Okay. And then you have stay out. Okay. Now it is so tempting, and I admit this, it is tempting in a indecision and stay out environment to be bearish. It is. So maybe you don't confirm it here, but if you see all bullish alignments, obviously stay bullish. If you see bearish alignments, here's the crazy part. I test this stuff literally week to week manually, like to the T, following exactly my rules. And everything aligns. I should be taking bearish trades in the bearish environment. And what happens is you'll see like these aggressive lows, and the market just rallies up, and then aggressive lows are gaps, and it goes down. It's like the timing of a bearish trade. It's super, super difficult unless you're giving yourself like a 3 to 6 month window. But if you're going week to week or even month to month, sometimes it is so difficult to get a winning trade. So what's funny is I just removed bearish trades, and you obviously know when to stay out. So it's like you stay in the market's ability to stay in a bull market, grind in a bull market, and statistically, bull markets last 4 to 5 times longer than bear markets. So to me, this is like the simplest like house edge to participate in the market with good reward to risk, and just participate in win, 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 win. And yes, it's not perfect. We have losses, right? I mean, we have 68% winners here. Okay. But with a profit factor 2.15, I mean, for every dollar that I risk, I can make $1 in reward. And I'm going to build a trade that I can make up to $2, $2.50 in reward. So if I can win 68% of my trades and win 1-to-1, I'm going to make money. If I can win 68% of my trades and win, let's say 1.5-to-1 or 2-to-1, I'm going to make a lot of money. Income grid trader. It's going to be fun. Okay. So anyway, we'll talk about that more tomorrow. Waterfall income. What's that? Let's see here. Waterfall income, solid service. So far has been a no freak out zone. That's good. Yep. Sizing properly. Yep. Low stress trades. Very nice. It's just flipped upside down, Scott. So my option chain, I can flip it this way. Yeah. I do that because when I do the daily profit play, it's easy for me to see if I put the strikes to the upside. So here's center price. Here's center price. I look at my call side, and that's above price. I look at my put side, it's below price. So when I teach the trade, it's a little bit easier to understand. Like when you look at a chart, we're selling the call strikes above current price and we're selling the puts below current price. It's just, we can kind of get the orientation of our trades a little bit better. Yeah, I know some platforms don't do it. Just one edge that Tasty was built by the same people that built Thinkorswim. They just made some tweaks and improvements, and I don't know, that happens to be one thing that I like. All right, what else we have here? Let's see here. Don't chase them. Most of my exposure's out. Yep. Same. So I mean, we've got some pretty good trades rolled in. And to look at Kent's comments there, I know he sent that to just me and Blake, but um, win rate is true. Yeah, I mean, we're winning 94% of our trades. We're giving ourselves margin for error. I have a pretty clean like strategy one is very cost effective, no fuss, set and forget it. Strategy two is, to me, it's like I'm teaching the strategies a bit more advanced, but I love strategy two a lot. And you know, the difference right now is, look, I think that this market, and I hate to say this, but everyone loves a really simple, smooth bull market, right? Everyone can make a lot of money in the environment. Here's where the crazy stuff is needed. When this is happening, okay, when these markets are down like this, what we are doing is we are participating with time on our side. We're going out like 60, 80, 90 days for a lot of these trades. And so even with this nastiness and the market response, every trade we took like one loss that had a February expiration. And then after that, all these were back in a profit. And then we were to participate week after week after week. And so, yes, you take like one loss here, and then every week after that is winners and 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 winners. So like one loss that sets you back like maybe 5 trades, 6 trades as far as risk defined trades, and then the rest all winners. I mean that's a lot of fun. Like this is not a very damaging position, and I've even shown like, well, if you wanted to go out farther, like instead of like a 60-day trade, if we went out like 90 days, if we went 120 days, a lot of these have been avoided. But the reality is, yeah, 2022, for example, these trades would have still survived. 2022 was like a crazy 10-month bear market, right? But these trades, if you took losses, like yeah, an expiration here that price doesn't get back in 40 to 60 days, like it's okay. But we don't just trade at the money. So anyway, it's just been a really fun service for me to run with teaching you like all the details of here's our risk, here's our reward. We know what has to happen, and where does price have to be? So right now, like the most risk I have is price would have to be back below the 200-day moving average. If price is back below this, we're going to take on some risk, but I have $8,000 in profit trap. And I hopefully have like one hit or two hit, right? And I also have trades that are down below 6,000, which there's tons of room for error, and they also have profit traps. So I think the reality is if we just see the market drifting higher, going sideways, flushing down and bouncing back up, it just stays in this range. We are going to have like the next 8 or 9 trades we have open will all be winners. And that will put us up to like 118, 119 winners for the service. And that's a pretty good run at like 94% win rate. Okay. So it's been solid. It's been fun. I have refined it. I added the strategy too, just because I think I've been cautiously bullish. I've been pretty surprised that this market through especially September, October had little to no pullbacks. And then we had a little fluctuation here in, October was a 1-day sell-off. November was a decent sell-off because we started out here, right? Highs in October 29th, and then we sold off about 6%. So that was our, correction. Now that that's been kind of reset, I mean, the VIX I think is elevated for this week, but barely. I mean, we're talking, high VIX at 28, 29, and we've seen that a couple times. So unless the VIX is going to get another powwow run to the end of the year, we're probably going to just stay sideways on the VIX, not have any surprises, and the market just kind of exists, which is totally fine. And that'll be, all winners for waterfall income. All right, cool. All right. So on that note, I am going to throw a class in. I'll get this actually scheduled. Hang on a second. So I said Thursday at 2 p.m. Let me go Thursday, 2 p.m. Okay. Waterfall income. Okay. Thursday, 2 p.m. Eastern time, we'll run another class. All right. So a little disclaimer, profits and performance are not typical. We make no future earnings claims. We have an 12-year study that's gone back over 540 trades, 97.1% win rate. The way that I've taken this trade every single week, like clockwork, is in the waterfall income class. We have an average return of 17% with winners and losers. The risk and reward we're talking about today is about a 15 to 20% return on risk. So if I'm risking 5K, I can make 1,000. Okay. If I'm risking 500, I can make 100. Right. Just that's the scalability. So if you want to risk less, we can risk less. We want to risk more. I also can take this trade size down and we can risk like less than $100. So we can risk as little as, $60 to $100 and as much as you want. But what my personal like threshold is, I'm risking anywhere between $500 and $1,500 per trade. And we win like almost every single week, like clockwork. And the times that we've lost have been like literally a freaking bear market. Like this year's February, March, and April, we had one non-surviving trade, and everything else we were able to incorporate the bottom in April, work our way back up to the highs. We were trading every single week as the market was getting cheaper and more discounted. So I mean, we're participating in a market that is trying to go up, even though it had a flush down. We participated week after week, so we don't have to be perfect. We'd have to trade risk defined, give ourselves some time, and these winners happen way more than they don't. Okay. And that's the edge. So are there losing trades? Yeah. We take some losses. It's okay. I'll trade through it. All right. Here we go. So with nearly 30 years in the market, I do trade everything. Indexes, stocks, options, futures, Forex. I've spent probably 20 plus thousand hours in the markets. I've certainly seen a thing or two. What's happened the past few months, honestly, just life, man. Life since 2020 has been so weird for people. Um, it's just an interesting time we live in. I don't know what else to say it other than like it is what it is. It's just weird. Life has been very different for most people, probably quite disruptive, and it's probably going to get worse, like more disruptive, not worse necessarily, but probably disruptive. So what's been happening in the last like 10, 11, 12 months has been pretty alarming. 2025 has shown that governments around the world are getting pretty reckless. We have, global stimulus like crazy. We have global fiscal policy coming out left and right. Chinese markets are backed up by the government, most aggressive stimulus since the pandemic. Eurozone for the first time in over a decade, finally putting some money together to spend. So fiscal policy in Eurozone. The U.S., of course, running hot like crazy with fiscal dominance. Inevitable outcome, most likely sticky inflation. I'm not going to say like hyperinflation. That's the biggest fear. I think that's maybe a little bit overdone. I don't want to be surprised by this, but I think a second wave inflation, or at least just more persistent inflation, is going to continue to happen. After that peak in 2022 peaked around 9%. Yes, we've fallen, but life is more expensive. If you care about your family's financial future, which I know you do, no one cares about your money more than you do. So pay close attention. This is an income technique that can help us handle the rising cost of living. By the end of this broadcast, if you want to join me, on my master classes this week. Our trade, we have 110 winners in the service. We're looking for 111th. That started at 0, like just over a year ago. So we had to start with trade 1. That was a winner. Trade 2, trade 3, trade 4, week after week after week, like clockwork. And we're now up to 110 winning trades, and hopefully have 111th right around the corner. And by the end of the year, we'll probably be closer to 120. We have some stacked orders in, so we'll be closer to 120 wins by the end of the year. So I want you to think about this. We'll talk about that risk 5K. If we're doing this every single week, you can make about $1,000, 15 to 20% return on your risk every single week, like clockwork. One trade, one ticker, same time each week. Okay, and I mean this literally. Monday, March 4th, noon. I'm live every Monday at 11:30 a.m. for Waterfall Income, and we're posting the trade by around noon. Shutting down the computer, check out the rest of the week. Everything works out. That 5K risk is paying $11.44 in your brokerage account. Following week, same thing like clockwork. Few days go by, trade automatically closes out for you. You can set the take profit in your broker platform. That 5K risk is $11.86. The very next week, like clockwork again, rinse and repeat. 5K risk, $12.97 in income. Final Monday, no different. Same time, same ticker, same day. 5K risk, $11.50 in income. Even though the market went down, didn't matter. That's about $4,800 of profit during the month of March. One trade, one ticker, same time each week. with risk capital. So I call these weekly income payouts weekly windfalls. They have had the power to pay us up, down, and sideways, right? I've seen this market literally for this 12 years of data. We have had 7 corrections in the market of over 20% to the downside, and we have still had winning trades. And this tracker, by the way, is only bullish. I'm only trading the market bullish because if you've been around for the last 5, 10, 15, 20 years, you have seen this market survive all sorts of crazy stuff to the upside. The market tries to grind higher. Okay. So if you think about this, every 100 trades, we have 94, 95, 96, 97 winners out of those 100. So this is why I'm excited to share this with everybody. This is why it's one of my favorite courses to teach, get people introduced to options, do a couple of basic trades with to me, one of the most important phenomenons in the market. So I'll reveal what we trade and why we trade every Monday at 11:59. So we're live at 11:30. Trade goes out by noon. But I want to be clear. There's no guarantees here. There's no instant magic pill. This isn't gambling. I'm certainly not taking massive trade sizes here. I'm taking what is risk capital. Less than 1% risk week after week after week. Okay. To me, this is a realistic approach that is designed to help give us an opportunity to target steady income on a weekly basis. It doesn't matter if you have a multi-million-dollar retirement account, or if you're just starting out with a few $100, anybody can learn this technique. So brokerage account, permission trade options, and a couple minutes with me each and every Monday. So I make it as easy as possible to follow. I make it consistent. And you want to join me in a live trade? We'll do this on Mondays for 111th winner. If you want to join me for my masterclass, we'll have that this week. Okay, we can target this income essentially hands-free. So if it gets you excited, perk your ears up and stick around. Welcome to Weekly Windfalls. Okay, hopefully at this point, trading with you every single day, you know me. I've been in the markets for now going on 26 years. Options are my favorite tool. I will trade everything. I'll trade anything and everything. If I feel like I can make a trade, it's probabilistic, mechanically systematic, making money, I will do it. But I show up and trade with you every single day. Okay. So some of my top followers making a killing. Here's Ken, 16 wins, 1 loss in the first month. Kathy making $1,000 a day on average. Randy crushing it for daily profit play with over 90% winners at 200 of those clocked in. Lynn turned 4K and over 20 grand. And today I'm revealing a brand new technique that maybe you've not seen before for my waterfall income. This is 5K risk for $1,000 profit or less or more. Okay. I risk less. Personally, I'm like the $500 to $1,500 risk. That fits my thresholds of less than 1%. So I want you to know that this is important, that this is not get rich quick. Like, this is steady, reliable income, weekly income. That's what it's for. Okay. So don't over leverage yourself. When you get into the classes, we talk about the strategy. I mean, I always ask traders, like, what are you comfortable risking? Some people want to risk $500 a week. Cool. We can do that. Some people want to risk, $200 a week. Okay. We can do that. Thousands out. I don't care. You know yourself. You have to know yourself as a trader. You have to know your thresholds of what's comfortable, what's not. No trade, no loss, no win should really make you have any emotions. Okay. You got to manage them. I'm not saying you have to ignore them. It's like, but manage them. So when you get to the point where losses and wins feel about the same, you're on your way to be a pretty good trader. So the timing of this initiative is pretty solid. Right now we get it. A lot of people, young or old, are strapped for cash. Inflation's been a pretty persistent thing in most people's lives the last 5 years. Literally everything's more expensive. Unfortunately, everything's more expensive, and it's not going to get better. So a lot of Americans can barely afford to save any money. Cash rates have plummeted. Savings rates have plummeted. Credit card debt's at all-time highs. Subprime auto, student loans, you name it. All this stuff is happening. You've got to take on credit card debt to save your furry friend, or you can't afford to buy something for your loved ones. Credit card debt is the worst. So that's why I'm here today on a special mission, unlike anything I've done before, to target some extra income weekly, like clockwork, consistently, systematic, mechanical. One trade, one ticker, same time each week. Back in April, you have that same 5K to play with. We can take these trades, like I said, as little as $100. I'll teach that in class this week. This was a big shakeout. This is April 2024. The markets were down. We saw the S&P down 5% in a single month. We just saw that recently, end of October to November. We saw a 5 to 6% correction in the S&P this year. So it's not unusual for the market to have a bit of a correction. We just refuse to let it happen, or the things have to get so bad for it to happen. It's kind of crazy. Anyway, mark's down 5%. Every asset sold off that month. NASDAQ's down, joining the S&P down 6%. Bitcoin slipped double digits. Even bonds were down double digits almost. It's crazy. So most traders were staring at red, staring at drawdowns, losing money. But if you were in weekly windfalls with me, you would have fared much better, because you not only hit once, not twice, but guess what? Every Monday with me in April, we made money. $1,054 in that 5K risk, 1166, 1639, and 1153. Over 5 grand for a month where the markets were down, while most investors are losing their shirts and seeing red and drawdowns. And that's one trade, one ticker each and every week. Okay. Household expenses. This math is kind of staggering. Bare necessity of just to get by. Average household needs about $73,000 in fixed expenses. Unfortunately, the average household in the U.S. is only pulling in about 75K gross income. That's before taxes. So how does this math make any sense? If you have to spend $73,000 a year to live with necessities, and you also have 75K gross that's going to be taxed, there's not enough tax credits to make up for that, and that's why most people are struggling to save. Am I in? Hang on a second. Sorry. Okay. I think I'm good. That was weird. I heard Graham I was in a session for playbook or something. Anyway, so the dream house, the dream car, the dream vacation, whatever, it's getting pushed away right now. Unfortunately, I think that the American dream has slipped a little bit more from most people's grasp than probably ever before. We have one of the biggest affordability crises in the U.S. we've ever had. I get it, but I'm a glass half full type guy. You got to be. If you want to be an investor, you got to be. There's no reason to be doom and gloom here. If you want to be doom and gloom, you could be Michael Burry and fail like he's done since 2008 after he had an awesome trade. After that, he's called, the joke is he's called 50 of the last 2 crashes. So, the reality is cash is tight for a lot of folks right now. But here's the good thing. Here's the glass half full. If we can show up and trade each and every Monday, okay, each and every Monday, like clockwork, generating nice, consistent income, would that help? If we could win 90+% of our trades routinely, know exactly where we're right and wrong, watch the markets do what the markets do best, would we be happy? I'd be happy. So do we have to pick up a second job, work overtime? No. Trading is the best side hustle in the world. So if you can make an extra $5,000 when everything asset wise is down, including S&P, NASDAQ, Bitcoin, bonds, everything down, we still make money. Pretty good. So do I guarantee this? No. I know the markets can be unpredictable, but what gets me excited about weekly windfalls is these are the type of steady results we have seen through 7 corrections of 20+% or more. We have still made money 94% of the time, 97% of the time when you go back that far. Okay. So for the last year and a half, we've made, wins 94% of the time, and we've experienced some crazy moves. We had a, 6% decline in December of last year. We had a 15% decline in April this year. We had a 20% peak to trough this year. We've survived some crazy stuff and come out ahead. So that's why I like the trade. It works. It's kind of bulletproof. You dollar cost average in the markets. The phenomenon is just let the market be the market. Okay. And this is one trade, one ticker, same time each week. Okay. So we did March together, April together. Here is the downturn. In April, we still made money. And then May was a rally that came back to break even or better. So if you're a buy and hold investor, you're basically like back to break even after sitting and sweating this thing out for 60 days. If you're a waterfall income trade with me, take advantage of these weekly windfalls. You had another 4 winners in a row. 5K risk in each one, 1150, 1209, 1101, and 1672 for another $5,000 going 4 for 4. That's why we have a silky smooth equity curve. That's why we survive and give ourselves time and let the price do what it does best. If you're twice as confident and you invest twice as much, you can make more money. That would have been for the month of May over $10,000 in a single month. Okay. A lot of people, I get it. They're strapped for cash. It's not like they don't want to save money. Okay. It's important to have that rainy day fund, have that extra 3 to 6 months set aside, or just build your trading account, build your retirement up, have some good stuff going on in your life. But, life is expensive. It's gotten expensive. Inflation is persistent. It's pretty impossible to save money right now. This is crazy. Car payments have jumped almost double. Right? Huge increase in car payments. Financing has not gotten cheaper. Insurance is 50 to 100% higher. Price of the grocery store higher, skyrocketing, right? Mortgages, most unaffordable housing market we've had ever, based on what you pull in for income, based on the cost of a home. I mean, it's now the rule of thumb is like you need like 40 to 50% of your income on average household income, average home price to have a house. And it used to be a rule of like 20, 25, 30%. So big jump. Same house, same property. Just a few years later, almost double in price. So, you call that debasement trade, you call that inflation, you call that whatever. It's just the hard fact is this isn't getting better. Not yet. Might not. Got to find a way to offset it. That's my answer is like, let's just offset it. I can't rely on like, oh, things are going to get cheaper. Probably not. Life probably won't get cheaper. So how about we find a way to make more money? All right, take a look at this chart. This is 1970s, 2000s. This is when Nixon, Arthur Burns comboed from president Fed chair to run the economy hot for nearly a decade. Massive inflation, cooled off, and then a second wave that lasted years. That's when Paul Volcker had to step in and smash the economy, right? Establish Fed credibility again, pretty much put us into a nasty recession that was a lost decade. Do we have the same thing happening again? Well, there's arguments. Yes, our valuations are at like 24, 25 times earnings in the S&P. That's like in the 97th percentile, 98th percentile, which typically means forward returns are going to be lackluster. So look, we could go up an extra 20, 30, 50%, but we could also crash and give it all back. And so the decade could be like, yeah, forward returns are minimum. So we have to find a way to trade through this. So what comes next? If we have a stickier, more persistent, or even a higher wave of inflation that's coming, nothing's going to be good. Cost of living goes higher. Some economists suggesting that households could be facing another $20,000 in expenses. This is why I want to offset it. This is why I want to have something that grows to help maintain a standard of living that helps grow with the crazy, cost of living. One trade, one ticker, same time each week. Anybody can learn this technique. I teach this to everyone all over the world. You can do this from anywhere. Any major brokerage will allow you to take the trade, permission to trade options. That's all you need, right? So we do this every single Monday like clockwork. So April was down. We still made money, $5,000. May rally, we still made money. June rally, guess what? Another 4 for 4. Like clockwork. Another month without a single loser. 1250, 1000, 1000, and 1044. That's more income for the month of June. 4200 cash. Is that life-changing money? Yes, no, maybe so. Some yes, some barely noticeable. But I do think that when you're making money, having fun with the process, enjoying how you're trading, getting better at trading, seeing the benefits of trading, it's enough to move the needle in your day-to-day life. Catch up on some bills, replenish your savings, or even surprise your loved ones with a weekend getaway. So just to recap, we're talking about 16 trades, winner, winner, chicken dinner. All 16 trades, all winners. We had 40 trades in a row before we took our first loss. And that loss was manageable, by the way. So pretty cool stuff. But if you have that $1,000 per week goal, this does have a huge impact over time, because with those examples from March, April, May, June, it's almost 20K in those 4 months. Yes, it's risk capital, but that 20K, if you analyze it out, you're talking nearly a $60,000 raise at work. Does anybody get that? How many of us got paid an extra $60,000 last year? Probably not very many, or this year. But this is what's helped us, even through the craziest sideways markets, 20+% sideways ranges, or the peaks and troughs of 20 to 35% that the market has given us the last, 10 plus years, 11 plus years. We still made money. So yeah, it's been tested. It's been pretty bulletproof. I would, if I could go back and trade options at it to 1973, I would put the strategy up against anything, because I know it works. Okay. Plus, more importantly, is that we've taken live trades in the service. We have 110 wins live, and we have plenty more to go. All right. So you might be thinking, can you lose? Well, yes, I didn't say a 100%. Yes, we can lose. But what we should not do is trade with money that we cannot afford to lose. So we will take losses eventually. There'll be some losses here and there, but very few and far between. Do I want to place a losing trade ever? Of course not. I don't. So there's a risk cutting trick that I'll share with you in class this week. This to me is the safest way to consistently target extra income week after week. All right. First Monday in July, 1044 in income. Second Monday, 2377. We do trade options. Okay. This is an options based strategy. So when I say options, immediately the question pops up, are options risky? Well, sure. Most people, the way they trade options, will buy. They'll buy options. They'll buy a call option. They'll buy a put option, whatever. And this is what typically happens. You buy call options, and time is your worst enemy, and you don't realize how to manage it, because it is absolutely something you need to manage and harness when you're trading long options. So it's what options can be is basically options are offering leverage. Even though it's risk defined, it's still, offering leverage, because one contract represents 100 shares, and you're looking for that stock to move the right direction over a certain period of time. So the problem is when you buy options, you don't typically get the big payoff, because price doesn't move fast enough and aggressively enough on something like an index. It might move in individual stocks, but all the stuff is priced in. So, I'm a big believer in market efficiency. And, most options, from like 70 to 95% of options, are going to expire worthless if you hold them expiration. That's why I like to be a seller. So most buyers of options are wasting the money, don't realize that there's another way to play the game, that since 1973, options have been a liquidity game. It's been a zero sum game where a buyer wins, a seller loses, or a buyer loses, a seller wins. And that's the game. Okay. Sellers win way more than buyers. Expected moves are typically way bigger than actual moves. So when you're buying options and losing most of the time, stands reason that sellers will be taking the opposite side of that trade, winning, upwards of 95, 96, 97% of the time. This is how we've seen such a crazy edge in our trade. Over 550 trades for 12 years, 97.1% success rate. So essentially, we are selling options to speculators. So if you think about this like Vegas, if you're at that slot machine, pulling that lever, hoping to get lucky, you might get a hot streak. You might pull the slot, get a lucky payout once in a blue moon. But statistically speaking, the American Casino house edge is 56%. If you play any game long enough with those odds, you will lose all of your money. It is guaranteed. That's how casinos are built. So when you're selling options, you're essentially switching sides. You are now like the house. You are now like the casino, and you're collecting money from almost every transaction. And that is how, bull or bear market, we target this income every single week. Okay, third Monday in July, 1379. Monday after that, 2081, another undefeated month. So in all my years of trading, this has been like the most enjoyable, most reliable strategy for me to teach and trade. And I do think you're not going to see this type of steady returns anywhere else. If I have a 5K account and I put this in a high yield savings, if I want to set and forget it, just make me some money risk free. I understand that, right? 4 or 5 months of trading, throw in 5K, it's up, $80 in 4 or 5 months. Put in the S&P for that 4 or 5 month stretch when the market's up almost 10%. Yeah, great return, $430. But if you use that as risk capital, you put that starting stake into the trade each week, like not even close, $26,000. Okay, I've got a bigger number to show you in a second. So, do you spend all week watching the markets? No. The trade's set up. The trade automatically has a take profit. You put it in the broker platform. It closes out. So way less time in front of the screens and more time doing the things you love. Okay. Is this risky naked options? Of course not. This is all risk defined. So to me, this is like a tap and put on the golf course or shooting a little layup at the basketball court. Doesn't matter where you live. It doesn't matter who your brokerage is. If you have permission trade options, you can take the strategy. It doesn't matter how much experience you have in markets. I will teach you how to trade waterfall income. So you can start using this income method right away. Same time, same trade, week after week. We have 2 strategies we talk about. I'll teach that in master classes. So I'll show you everything you need for the groundbreaking income tool. And if we did this with a step-by-step video series and a live class, a one-off live class, we charge like $497 a la carte. But you can have that class and jump into my waterfall income service. Once you get into my master class, you jump in and see how clear-cut it really is. You can start using this technique right away, like clockwork. Follow the trade, take the same trade I do, get it locked and loaded, set the take profit. That's really all there is to it. Here's the first Monday in August. Set up the trade, $9.55. Next week, same trade, same time, $9.83. These opportunities line up as we speak. Okay. So if you want to see how straightforward it is with your own eyes, then come check it out on a Monday session. We're live every Monday at 11:30 a.m. You can watch over my shoulder, copy and paste, know exactly what my reward and risk is, how the trade is being taken, executed, and managed. You can throw in your own accounts. You can paper trade it. You can get the process down. Like just get comfortable. Nobody should be forcing trades. Nobody should be taking trades with money you can't afford to lose. But learn the process, and you can do this forever. This strategy is one of my like forever retirement strategies. I will do this thing passively. Well, not passively. It's like maybe go from week to week to maybe month to month, but week to week still pretty good. It's really good actually. So this is my most consistent weekly income service called Waterfall Income. This is what takes advantage of these weekly windfalls every Monday around noon Eastern time. This is what's allowed us to win 97% of our trades the last 12 years. And we have 110 winners live in the service since we launched this last fall. All right. From all walks of life, I don't care, if you've been trading for years, if you've never traded before, if you're brand new in investing, you're in the right place. I'll teach you. Okay. I pride myself and make sure I can accelerate the learning curve. We can learn how to trade. But here's how it's going to work. We're live at 11:30 a.m. every Monday. And we post a trade by noon to members in our classroom. Okay. Email, text message, SMS, or that's text message, notifications on your classroom, alerts in your classroom, Telegram notifications, whatever's most convenient for you, we will post these alerts. Okay. So email or text message comes to, take the trade if you want, set it up, set the take profit, you're done. Spend the week doing whatever you want to do. And what happens in a couple of weeks? You follow along, there's 1101 in income on that 5K risk. Opportunities like this keep rolling in. The next week was 1672. So almost 2,400 bucks in those 2 weeks. Pay off some debt, help the kids, help the grandkids, maybe start planning your next vacation. Holidays are right around the corner. These are all great choices to have. The most important thing is that we're not constantly worrying about, am I doing this right? Can I trade? Can I be successful trading? Is this something else I should do? It's like enjoy the process. Like if you enjoy the process and embrace the emotional side of like making wins and losses feel about the same, find a way to consistently make income. It feels good. Okay. And if you know me, I'm doing this. I've been trading for 25 plus years. I've been teaching traders for over a decade. I want to teach you like how to do this and do it well and understand like exactly the reward and risk that we're doing and been putting ourselves in the markets with, right? So it is an option-based strategy. If you're new to trading options, I want you to level up your skills. Options has been one of the biggest game changers of my career for trading for the better. I do have an option trading boot camp inside the classroom as bonus material. And every Monday we have a bit of a kickstart class. I also host master classes on the regular. So everything you need to hit the ground running for, waterfall income start to finish. Do you have to guess how it's performing? Never. We have a live trade tracker with all of our trades running, all of our exits, all of our profits, all of our percentages compared to the S&P. So this what gets me really jazzed up about these weekly trades. In the last 11 years, we have won a lot of those trades. Okay. That was really consistent. It stacks up over time. The number is pretty staggering. If you put in $5,000 into the S&P and walked away for 11 years, you just, had a 10-year coma. $5,000 turns into $27,300. That's not a bad return on your capital. Okay. What's crazy about weekly windfalls? Yes, it is risk capital week after week. But if I'm going to put 10 years of my life in the market, 11 years of my life in the market and trade every single week like clockwork, I would much rather walk away with $458,000 to show for it versus $27,000 as a one-time investment. Okay. So yes, it is risk capital, but that is risk capital that can be leveraged and utilized for big, big gains over the course of 10, 11 years. So pretty good return, huge profit factor. Are you getting rich overnight? No, this is over a 10, 11-year period. So it is consistently stacking up trades and results week after week. But the best part is you out-earn the S&P by more than 15 times over that same duration. So publishing team wanted to put this at $34.95. My website is chrispulvertrading.com. Waterfall income is listed a la carte at $34.95. Okay, that's 1 year of access. You still trade with me every single Monday. Master classes on the regular, all the comprehensive educational material inside the